All right, everybody, welcome back to another breakdown. I know I haven't posted in here in quite some time, but I'm just kind of easing back into the markets, getting back into the rhythm of things. It is February 1st now, and it is the first trade of the month, which was an absolute banger. Ended up making almost $11,000 today, and I want to break down this trade for you guys. So, kind of going over my journal here. I want to go over the actual journal first before I get into the results. So as you can see, I wasn't looking at Nasdaq. I wasn't looking at US 30 today. So my hot movers of the day was just SPX or ES because I saw the cleanest setup. And again, like for those of you guys that were in the live room today, you guys should already know it was actually fantastic because I called out this trade so perfectly, and you know what? It was one of those trading days where everything just went perfect. Like everything I called out said it would. Everything that I called out actually ended up happening, but to the T. So today was one of those days where I was really impressed with myself. But you can just see it through experience. For those of you guys that are in the live trading room, you guys can go ahead and watch the recording of the live of this trade on of this trade. It's already on WAP. So today's game plan, right? So today I was looking, of course, at ES because it was my hot mover for the day. I was looking for originally a bounce play, which my apologies for the typos. A bounce play from 48.95 to 48.76. That was the trade I was looking for on a short. Or I was looking for a break of the low set up at 48.76 if the volume was right. So let's take a look at my pre-market notes here. Looking for a bounce play at 48.95 down to 48.76, which are both H1 key levels. Going to look for shorts with the bearish trend we are seeing on the lower time frames. If price action continues to dump after PMI, I'll look for a break of the low setup for a quick scalp. Those are my pre-market notes. It is so I cannot stress how important it is to plan your day and game plan your trading setup for the day. Because if I said, hey, you know what, I'm going to be looking for shorts from this level to this level, or I'm going to be looking for shorts at this level, bro, it's kind of like, what are you doing if you're starting to take long positions and in your notes you see that you took long positions and you took a loss? It's like you're not following your game plan. It's literally the same exact thing as if you were to be on a football team and everybody agrees that you're gonna go with this specific play. Doesn't matter what it is. Could be a Hail Mary, let's call it. But then you try and go for a running play and you get nowhere and you get no yardage. Your coach is gonna be pissed. Your team members are gonna be pissed. And in trading, the only person that you're doing wrong is yourself because you're causing yourself more losses by not following your game plan. And ultimately, it's the same exact thing. What you're doing is you are your own Fortune 500 company. And if you're working for one of these big corporations, call it JP Morgan, call it Chase, and you're breaking essentially the code of conduct, not even just the code of conduct, but the regular rules and regulations at that bank, and you're costing that bank tens of thousands of dollars every single year because of very simple mistakes, they're going to fire you quick. And in trading, what does that look like? You're going to blow your accounts and you're going to lose money that's so unnecessary to lose. And that's typically a lot of what people that don't have an organized trading system do. They lose money. They ask themselves, hey, I don't know why I'm not profitable yet. I win a lot of my trades, but you give back so much money that you're just not profitable, which is why it's so important. You need to be journaling all of your trades. You need to have your pre-market analysis, pre-market game plan, etc., etc. So, now, as you guys can see, this was my pre-market analysis. That's what I was looking for. And as you can see here, the short that I ended up taking was, where's the price action here? Just cost. I ended up taking the shorts. You can't really see it here, but you can see it over here. I ended up taking the shorts roughly around this area, which is going to be 49.83. And the level that I was looking for price action to reject was 49.85 right after I got the confirmation. Now, unfortunately, I did close the trade a little bit too early, which is already here on my notes that I closed the trade too early. But now going over the post-market review, didn't trade the market open because of PMI at 10 a.m. Waited until after PMI, which my original game plan was to look for a break of the lows on the day, but price action pulled all the way back up into the H1 key level resistance range. Ended up waiting for a liquidity grab, which did happen when price action closed back under resistance on the 15-minute time frame. I executed complete typo here. Executed the position and price went straight to profit. It was a fantastic trading day. Now, what can I have taken away from this trading day that was a mistake of mine? Which for me personally, as you guys can see, like this is a chart here. I was targeting this area of support at 48.79, which as you can see, I closed at 48.86. I ended up costing myself like $7,000 worth of profit, which lesson on the day today is left around 7K on the table because I closed the position early because I was scared price was going to pull back up and take me out at break even. Need to start trailing stop loss based off of our multiple. Now, I did leave a few things out of the journal, such as, I was also worried that it was going to be NFP tomorrow. The markets was chopping around all day. We had an initial rejection of this area of support on the VWAP, and then price action pulled all the way back up and higher. So there was a lot going through my head, but ultimately I was too focused on making money instead of focusing on the trade, which essentially would bring me more money. Because if you guys could see, I ended up making $11,000 today, but I risked a total of roughly $6,000. It was a little bit less than that, but I risked, let's call it $6,000. And my initial take profit would have made me $18,000, and I made only $11,000, which I don't want to sound, I'm not grateful for $11,000, but I did leave a lot on the table. And what trading is you need to critique yourself to always try to improve, to try and squeeze out as much money as you can from these markets. Now, there's going to be days where everything doesn't go to plan, so I'm not too hard on myself because at the end of the day, it's trading. Nothing ever really goes as perfect as planned. The number one goal is to protect your capital. As you guys can see, I had a planned R multiple of around a 3-to-1, which I ended up actually realizing a 1.83 R multiple. Now, as you guys can see here, here's the entry, here's the exit. This was my target. So I did leave a good chunk on the table. Now, going over the actual breakdown itself, this playbook, see here, all the rules that I checked off, etc., etc. Now, going over the actual trade itself, this is what the chart actually looked like. So yesterday, in the live trading room, we actually ended up catching these shorts on a break of the low setup, which is going to be 48.95, and we caught the move all the way down into the support range, literally to the point 48.76, which if you guys take a look at previous price action, which again, I've said it multiple times in the past, and I'll say it again multiple times in the future because I want to instill this into you guys, right? Previous price action will always leave clues as to where future price action may travel to. So again, you have to think about this in the state of probabilities and our mindset of probabilities. If we've seen price action break under the support range, where could we go to next? And that's going to be the next support range from previous price action. Now, there's going to be times where, hey, you know what, Raul? Like, the next support range is all the way down here. What do I do here? Well, if you look at a 15-minute time frame, what do you have here? You have support. And in situations like this, it's like, okay, well, I'm going to take the shorts. The long-term target is going to be 48.40, but I'm going to trail my stop loss aggressively based off of our multiple because I really don't know if price is going to get all the way down there. And you want to protect your assets as much as you possibly can. So these two key levels is essentially the same exact key levels that we ended up taking today's trades off of, literally from almost start to finish. We took the shorts off of here on our break of the lows down into here. This was the take profit. And we took the bounce play off of this area right here down into the same take profit as yesterday's day, which is fantastic. So it was like 2 trading days back to back, bread and butter. Now, originally, like I said previously in my pre-market notes, I didn't trade until after PMI came out, which PMI was at 10 a.m. Eastern Standard Time. And price pulled all the way back up into this area. Now, in the live room, and what I was basically telling my students and guiding my students that trade with me is, yes, although we did see price action initially reject 48.95 on this 15-minute time frame, like it's still a risky trade. Like you would have been fine if you would have had your stops at 4,900, which is the only area to have your stops above resistance here, executing on this position. But sometimes it's not always about taking the very first execution you see. Now, I didn't execute here simply because I was waiting for price action, because on the 15-minute time frame, yes, we did get that initial rejection and we did get an initial push down, which, yeah, sure, I could have taken the trade, stopped out at break even for a 1-to-1 risk to reward ratio, but I'm trying to be as selective as possible with my trades. And I'm doing this specifically because I'm getting ready to trade big capital again and put on big position sizes. Even though today was a pretty big position size day, it was 20 contracts, which probably equivalates to maybe like 10 or 15 lots on MetaTrader 5 unregulated brokerage. Again, I was risking like 6 G's to make roughly $30,000. You know, I need to instill in my mindset, and I'm doing that practice now that, hey, you know what? If I'm going to be trading again like how I was trading last year with hundreds of thousands of dollars sitting in my trading account and taking these big trades, I need to focus on the quality setups. So that's not something that you do when you get there. That's something you start training yourself to do before you even get there. It's just the same exact way an Olympic athlete would train for the Olympics. They don't just get to the Olympics and say, okay, I'm here, I'm gonna just absolutely fucking kill it. They train months, years in advance to get to that point to just show off, I don't want to say show off, but to perform as best as they possibly could for whatever they're trying out in the Olympics. It's the same exact thing in trading. And that's why so many of you guys are fucking up, because you just think, yeah, you know what? I've never traded in my life. I'm gonna go get a funded account of $300,000 and I'm just gonna try and make 10% a month. Like, you're setting the wrong expectations for yourself, and it's only gonna take somebody like me to let you know what it really is, so you guys can actually succeed. And I'm letting you know now, like this, you have to train your mind before. So again, that's why I didn't take these initial shorts, because I'm training myself right now to focus again only on the quality versus the quantity. Now, when it came to me not executing on this position, the 15-minute time frame did actually close, but the 30-minute time frame was still fluctuating at this point in time, and there was a lot of volume to the upside on the 30-minute time frame after a big rejection towards the downside. And when we see that volume, typically, like when it comes to a bounce play, I want to see bullish momentum slow down. Now, in this situation here, it's like, okay, well, once price started to actually come back up, it's like, you know what? I'm thinking we could see a potential liquidity grab here, and then we could see that move to the downside that we were actually looking for, because there is definitely some form of selling pressure here from the pre-market. And then over here, we did reject, and price action did actually give us a little bit of a move to the downside. So there's definitely sellers interested in this price point. Let's just wait and see. Now that price had closed above our resistance range, it didn't necessarily close above 4,900, which I wanted to see price action maintain itself under 4,900 the entire time. This 15-minute time frame is not a candlestick I want to execute on, which is why time frame correlation is so important as well, because you look at the 5-minute time frame, that is a strong bullish candlestick. I'm not going to enter a short after this 5-minute candlestick either. And again, you have to be looking at the 5-minute, the 15-minute, the 30-minute. What are all of these time frames doing? What are all of these different time frames telling you? You go to the hour time frame, and price action has a big rejection towards the downside at that point in time, at least, and then it has a huge bullish candlestick currently printing. That's not a candlestick we're going to go short on. So in a situation like this, it's like, okay, I'm not going to be really looking at the 5-minute time frame, because I want to find a nice balance in terms of time frames between the hour, the 30-minute, and the 5 and the 3-minute time frame. To me, my lower time frames are going to be the 3-minute, the 5-minute, and then my higher time frames are going to be the 30-minute and the 1 hour. I mean, and my long term time frames are the 4 hour and the daily. So for me, like the nice median for intraday setups is going to be the 15-minute time frame. What I wanted to see was one of two things. Either price continue to go bullish and fail and give us a huge wick towards the downside and print a doji candlestick, or close back under resistance, or for price action to close back under resistance with a confirmed close. And then that's when we can execute the position. And I basically let everybody know when this 15-minute candlestick, I literally called it so perfectly, which is why today was such a great trading day. When this 15-minute candlestick closed, it's like, hey guys, you know what? You can enter the shorts now, but keep in mind it's still a bit risky because the hour time frame is still fluctuating. So you can enter the shorts now at a smaller position where it is riskier, or you can wait for the hour to close. Which for me, as you guys already know, I entered and executed right when that 15-minute candlestick actually closed. Which if I go to like the 15-minute time frame over here, it's not really going to show you exactly where I executed, but you could see that I executed basically right here. My entry was somewhere along 48.93. I executed there, and then again, like, before you even execute a position, you have to ask yourself, where am I going to get out if I'm wrong? Where am I going to get out if I'm right? And for me, when I executed my trade, I knew I'm going to get out if I'm wrong if price action taps into this 4,900 area. I'm going to get out if I'm right roughly along this area here. So that's kind of what my setup actually looked like. Could have been a little bit less because the planned R multiple was almost a 3R multiple. Which actually, thinking about it now, is more like a 2.8. So where I'm getting out if I'm wrong is going to be at above resistance, where price action were to actually take out this high. And when if price action were to take out this high, there's a greater probability that price will actually continue to go higher and make new highs. Now, I'm going to get out if I'm right at this key level down here at 48.76, which we all know I didn't get out there. I got out a little bit earlier, which would typically be this area of support here, because again, I don't know what price action is going to do at support. All I know is that price action has a good probability from coming to here to here. I don't have enough data. I don't have enough information to determine if price action is going to break through this area or not. So I want to take all of my profit off here. And if it does actually end up breaking through, then I'll look for a different setup, which literally I ended up closing like somewhere along this area here. When price action actually came all the way over here. I told everybody inside of the live room, for those of you guys still holding, close your positions because we don't know if prices are going to break through this level, and we've literally just caught a fantastic position. Some people made a 5R multiple, some people made a 3R multiple, and that's what I love about the live room. We talk about so many different scenarios. Some people ended up entering along this area here, some people ended up entering here, some people entering down here, and the different risk to rewards were all over the place. But other than that, it was a fantastic trading day. I hope this video provided some value towards you guys, and if you guys are interested in trading with me live at least 3 times a week on Zoom, make sure you guys join the war room. Not just that, you guys can also get access to the free mini crash course. I'll talk to you guys in the next video.